And we are live, ladies and gentlemen. Welcome back to round two. Good to have you back, Brad. And lots of change the last 48 hours. I want to kind of touch base with you on the article that you wrote on your predictions, what's going to happen with the epidemic right now, or pandemic, as I say, and for the financial and economic aspects. And so for people who are interested in this, Brad wrote, and I'll do a screen share over here. Brad really wrote a really good piece. I think it was today, bro. I think he published
Yeah,
it, right?
I was just actually writing a quick update to a friend who messaged me like, what should I do? And then I just sent him a quick message about what I thought was going to happen. And then I just kind of expanded upon it and figured I'd say what I think is going to happen over the next 2 weeks, next medium term, like 3 months, and then the next year.
So let's go through this from the beginning. Like, what's your predictions? What's going on?
Well, we can basically go right straight from it. It's barring any craziness that happens over this weekend, like say Trump goes to the hospital or something like that with coronavirus, or New York is declared a state of emergency, or something like that, where they're quarantining the whole city like Hubei style. I think the likelihood is that the stock market's going to open up kind of flat with maybe a slight rally or a little bounce or a little drop on Monday. Because of just the way the markets work. There was a massive rally, the biggest rally in history almost, that happened on Friday after the press conference Trump gave. So the natural thing there is just go down a little bit, or flat, or a small gain. I don't think we're going to see massive uptick in the stock markets again next week. But I don't think the fireworks are done. I think that as the real economic impacts get rippled through the economy locally and nationally in Canada and the US and globally, then over time we're going to see some medium-term bear market recessionary effects as people start losing their jobs, real estate prices start to go down, all that stuff. But over the short term, it's going to be very volatile. And if you go back to the Great Depression and look at the stock charts of how things traded back then, it was like new highs made, then new crazy lows made, and then new highs and low. It was very volatile. So the banks did not have the ability back then to print money and do helicopter money bailouts and to stimulate with fresh printing like they do now. So that's why we're probably not going to go into another depression. It's going to be like if we didn't have monetary stimulus like we're going to see, then we would probably go into a depression, because the monetary stimulus over the last 10 years has actually inflated stocks and everything's so high, overvalued. But they're going to continue that, right? So that's probably going to stave off like a massive drop in the stock market, like volatile drop in the stock market this week. I think they're going to announce, like there's going to be some negative news by the end of next week when the coronavirus numbers start to exponentially rise in the US because of the way it's being handled. It's not being handled properly, I don't think. And the reality of that is going to hit as it starts to grow exponentially in New York and Washington and different places, Florida, where there's already local outbreaks and community spreading happening. And you look, they're about 7 or 8 days behind places like Italy and Spain. And man, you look at what's happening there, and it's not good. Full quarantines. The military is like, the police are patrolling the streets, reminding people gently to stay indoors and everything. So that's going to hurt the economy for sure. So I think the stock market's going to maybe start to sell off towards the end of next week. And then I think the next Monday, by that time, I think there's going to be bad figures, and like the hospitals are maybe going to start getting overwhelmed, like we saw in Italy and like we're going to see in Spain and we see in France happening right now. That's going to be happening in the US and probably in Canada too. And then those headlines are probably going to cause a dramatic crash in the markets again next Monday. So I think we got the eye of the hurricane is going to be this week, and then next week after that is probably going to be a big crash. And the central banks and the Federal Reserve, I think, are going to save the firepower for when the next big crash does happen. I think maybe on the weekend next week or whatever, they're going to start announcing more rate cuts and trillions of dollars and more spending, and that's going to try to stabilize things going out 3 weeks from now. I'd say that's probably about when they're going to be announcing major stimulus for banks and like just businesses that are going to be struggling, like airlines, cruises, restaurant industry, all that stuff. So that's like the short term. That's what I think is going to happen in the short term, like next 2 weeks. And so how do you prepare yourself for that? Would probably be like, don't try to time the markets. Just maybe this is the time to get into cash. And by get into cash, that means more like move your assets. Like if you got a retirement account or whatever, just move it to a money market fund that, so you don't have to take a tax hit. Because if you take all your RSPs out right now, you're going to have a big tax consequence. So you want to move it into a money market so you're not taking a huge tax hit if you got retirement accounts like 401ks in the States and stuff like that. That's what I would say. At least half of it. I would want to weather the storm, right? Like, why would you want to be exposed to this crazy volatility? I wouldn't. I don't.
And so for people who might not be familiar with that, what is a money market, in case they're wondering?
Money market is just basically a tax vehicle to be able to move your RRSP or your 401k or whatever into a cash position. It's just linked to cash. It's just like a stable coin, basically. Yeah. It's just 1-to-1. It's supposed to be anyways, 1-to-1 backed. So if you put $10,000 into a money market account, it's not going to fluctuate up and down in value. You're going to get like a whatever basis point interest rate on the money, like just like you would have in a savings account. So it's just like a tax optimized way to have your money in a retirement account for investing when you don't want to be in the markets, when you want to kind of be safely out in cash. But you don't want to leave it in there forever because it's not a good product to be like investing in. You don't want to be investing in money market funds because you might as well get a better interest rate with like a GIC or something like that.
Got this from Italy. El Machico, totally aligned on what they said till now. Couldn't be more accurate from an Italian living abroad.
Yeah. I got like that's what I'm thinking is going to happen for the next short term. Now obviously there's an edge case there. There's like things that could happen, like I said, total quarantine in California or New York. Hospitals overrun this week already. Major CEOs continue to step down and panic selling from insiders, like things like that. That could obviously have an effect on the stock market, but I think everybody's kind of on the same page here. Everybody's very cautious. Everybody's expecting the Fed to bail them out. Corporations like Boeing are taking massive loans. So they've got like Boeing had, I think, $15 billion approved loan, and they just drew it down last week. So they took the $15 billion, or they requested it to cash. So they had the approval. It's like if you have a line of credit with a bank for $50,000 or like $10,000 or something, and you've only got $500 on that loan. If you need to do renovations on your house or something, you take the whole loan, right? And then you get the cash. Well, there's corporate loans like that too. They have lines of credit, and now the recommendation from what I'm hearing anyway is that all these big major corporations are going to be drawing down on those loans this week. So there's going to be massive cash positions in these companies to try to help them get through this. Mm-hmm. But I don't think there's going to be enough. This is maybe a bit insider baseball for people, but I don't think there's enough base money that exists to fulfill all of these requests for cash. But the Federal Reserve already announced that they're willing to do unlimited stimulus. So that basically means that if you're a mega corporation, a multinational corporation, with a $15 billion line of credit, you can take the money, and the Federal Reserve, even though the money doesn't exist, the Federal Reserve will give it to the bank that's giving you the money just to kind of keep things flowing.
Are they saying at what percentage they're giving it to them?
It's probably just at the base interest rate, which is extremely
Gotcha.
low right now. I would assume. I don't actually know. It's probably very low.
And so what do you have for, like, you wrote down that was a short term,
That was
and
the short term, yeah.
yeah. So what about the medium term?
Well, you pull it up and give me a quick reminder, because I think I said medium term was 1 to 3 months, right?
Yeah, you have like UBI style checks, interest rate suspension,
Right.
student loans, debt forgiveness, mortgage help, credit line interest loan, lowered healthcare expenses waived related to C-19 and tax breaks.
So yeah, so as 3 months goes on, as we get into months into this, and then I don't think that the US is going to have as easy of a time containing this as China did, because China took really draconian measures and did some things that wouldn't fly here. Like literally letting people die in their apartment buildings,
Yeah,
and like welding doors shut,
yeah,
and
yeah.
burning bodies 24/7 to keep up with the deaths and all that. Like, I don't think that's going to be. I don't think so. China did control it really fast, but they violated a lot of human rights and civil liberties to do that, and I
Hmm.
don't think that's going to fly over here. So I think we're going to have it's going to impact us more, and we're spreading a dangerous precedent from our leadership now already, that you don't need to get tested if you don't have the severe symptoms. And so that's basically signaling to me that we're just not ready, and we
Hmm.
don't have the capacity to handle this like China did. Like, no, there's no announcements of new hospitals being built or any quarantine facilities being built or anything like that, as far as I can tell, in the US or Canada yet. And by this
Hmm.
time in China's handling of it, they're already starting to announce we're gonna take drastic measures. We're gonna build new hospitals and all that stuff. So based on that, it's signaling to me that we're gonna have a rougher time when this thing peaks, and that's going to last about 3 months before we get it under control, or at least manage it.
Or you actually think here in Canada and in the States are going to do some UBI style?
I think they're going to have to. I think that people are going to, because the economic impacts of people staying home from school, their kids staying home from school, and people getting laid off, it's going to be, that's what can drive a recession or a depression. That can turn into like food stamp lines
Oh
around the
yeah, you look at
corner.
this. You seen? I pulled out the data from OpenTable. They have this for all the United States, but let me pull this up. Look at this. This is just Toronto, man, since the major announcement.
Oh yeah. You showed me that one. Yeah,
So
that's just what, like 2 days.
3 days, man, and you're down almost 40% attendees on OpenTable. Think about all the economic impact on restaurants. Seattle got hit the hardest. Is like down up 50%. 50% of all patrons aren't going to restaurants or ordering from them.
Yeah, it's undeniable that this is going to have long-term significant negative impacts to the economy, and our leadership is trying to say, like, we got this under control, don't worry about it, we'll take care of you. And they're going to have to try. Like, they're going to have to try. If they don't, it's going to be a depression level event, and nobody wants to see that. So they're going to turn the money printers on full blast and try to airdrop money on people, maybe like $1,000 a month or something like that, like Andrew Yang style, to stop a depression from happening. And I think that's going to be within the next 3 months or so. We'll see that at towards the tail end of it, as the stock market is entered a bear market, because they can stave off a depression, but I still think we're going to be down 50% from the highs.
Yeah, these highs are the most unnatural evaluations possible.
Yeah, that's why there's no reason why they should be that high. The multiples are
Like
insane.
stock to earning ratio is ridiculous, and their EBITDAs. Like I always look at the EBITDAs. I'm like, there's not even a dollar of profit in any of these companies.
Yeah, most of these companies are just taking on massive debt so they can expand
That's it.
fast, and then
Negative
hopefully,
EBITDA, not
yeah,
positive.
they're not making any money. I mean, they're making revenue, but they're not making
No
profits because
profit.
they're
Yeah.
expanding. And what happened there was Ray Dalio put out a great insight into this. He said that there's lots of money sloshing around. Like, there's private bankers and hedge funds and VCs, like the elite ones, that are getting the most benefit from the freshly printed money. They're getting the effect of that purchasing power. And the idea behind the Trump tax cuts and the quantitative easing and the bailouts basically
Mhm.
was to stimulate the economy so these investors, including retirement funds, were trying to find a return. So they weren't getting the return on bonds because bonds are at such low interest rates, and they didn't they wanted to get they wanted to invest the money and get higher returns on investing in private equity and companies and startups and stuff like WeWork. That was a
Yeah.
perfect example. It's just like, let's pump so much money into this thing that will put it on the public markets, and then we'll get our big return there. And there was actually a bunch of companies that didn't want to raise any more money because they didn't need the money to grow, but but these giant pools of money were basically saying, if you don't take our money, then we're going to go invest in a competitor and they're going to beat you. So you have to take the money. Otherwise, so it was just, there was lots of money sloshing around,
Yeah,
but the
but
average person's not getting it. It's
average
like,
person's not getting it, but there's also two caveats to that. The only way for them to get a return on that is a liquidity event. So there's like
right.
two forms of liquidity event. Either go do an IPO. If you look at statistically speaking, we've dropped 50% since the 2000s for an IPO. And the other one is acquisition. And so you look at all the shenanigans, a fucking shit show that's been going on with, yeah, and just like the recent one. What was that? When you mentioned it,
WeWork.
WeWork.
Yeah.
Like, it's a joke.
Yeah. It was bizarre. That was, a lot of people were calling that like peak tech IPO.
Yeah.
The people before that thought Snapchat was going to be that a couple of years ago, but then things turned around.
Casper, even the mattress company had to cut their IPO, I think, by half the valuation.
Yeah. Well, it's just I guess basically that the summarize that, like, or wrap that part up, was that there was lots of money being printed and given to people to try to stimulate investment and all that, but given to the elite, basically, not given to people like us. It was given to insiders and all that, and they weren't using it the way that the Federal Reserve and the other central banks and the government wanted it to be used. It was being kept and then being tried to put into startups and then put into the stock market. So go IPO, and it just created this froth of these really insane valuations and this need to grow and get crazy returns off of IPOs. And then you had things like WeWork happen, and Beyond Meat was another one that was just like insanity. And it happened a couple of years ago too with all the pot companies. It's all the same type of thing, right? So that was just bananas. So a lot of the companies were just overvalued anyway, and the stock prices were driven by the tax breaks that the Trump tax plan gave corporations, and the mandate from retirement and pension funds to get like 6-7% interest on these pensions. And so they would just take the money that was coming in from pensions and from the freshly printed money and buy bonds, corporate bonds. And then the money that the corporations got with selling the bonds, which was, you then reinvested into buying stock back, inflated the valuations. Like, it's all phantom. It's all fake value. They weren't doing research with these billions of dollars. They were just buying their stock back and pumping it up. And so that's why we have so far down to go, because all of this was just so far up. It was kind of manipulation. It was not real value being created. They weren't doing innovative research and stuff for the most part. It was mostly just like, well, how do we get returns? Let's just pump the prices of these things so that we can get returns.
We're going to drop down to like 10,000 points for the Dow Jones?
I don't know, man. I just think like it's likely within the next 3 months to see the stock markets at negative 50% from their highs, and to be in a real bear market. Not like the economy is going to be in a recession. There's going to be a bear market, I most likely think. I don't think there's going to be a depression, because I think they're going to print their way out of it. And I think people are going to want the money. People are like, there's not going to be enough pushback from people who are like hard money maximalists to be like winning this war. This is like, people are going to be hurting, and they're going to need bailouts. They're going to need to have their student loans, like some debt forgiveness happen, and some bailouts happen, and help with rent. Like, people are already struggling. I'm seeing on my local Facebook groups, like, people are panicking about like, what am I going to do for the 3 weeks that the kids are not in school? Like, I have to go to work. I've got friends messaging me saying their offices are closing down and stuff, and a family member messaged me already saying he lost his job over this already. So like, it's not just coronavirus happening. There's also the war, but the oil war happening with Saudi
Mm-hmm.
Arabia and Russia.
Mm-hmm.
So barring anything crazy happening outside of the band of like what everyone's expecting, I think that's a pretty conservative take on how it's going to go. They're going to try to print their way out of it, and I think they will do it, but I don't think it's going to stop a recession. I think it'll stop a depression.
Oh yeah, I think depression. Yeah, I'm not too big on the depression. I don't see it happening either. But I think we're gonna be in a very, very big, long sideways bear market recession for at least 2 years.
Yeah, I don't know how long it's going to be. I just, I'm not like a super expert on this. I get my information mostly from Real Vision. I love their stuff.
Really great. Yeah.
I've been following Raoul Paul and Kyle Bass.
Yeah.
They've got some free stuff on YouTube. I also listen to the Investors podcast.
Which one?
Preston Pish. I think that's how you say his name.
Okay. Yeah.
Who else has a good podcast on this stuff? Peak Prosperity has a good one. Macro Voices.
The best one that I see that covers everything, so geopolitics included in it, and economics, is Hidden Forces.
Oh yeah, is that Eric? Something?
No, it's Dimitri.
Okay. I've had that one on my list to listen to for a while, but there's just so much great content right now.
Hidden Forces it's in its own league. It's unreal. Okay. Big shout outs to Hidden Forces.
Nice.
But I read this book a while ago. This one, yeah, you ever heard of this book, The Fourth Turning?
Oh yeah, I was just about to mention that actually.
Solid book.
And I think that's what we're in right now. It seems like seems like we entered the fourth turning 3 or 4 years ago, and like now we're solidly gonna be in the fourth turning. I think is gonna. Do you want to give a summary for people so that they know what it is?
Well, I don't want to complicate, but in a nutshell, just there's phases of society, there's cycles of society, and everything repeats. And we're in an end stage of a cycle within our society, entering a new one. But the problem with a lot of these things with predictions is things like black swan, so the viral epidemic or pandemic with corona. These things you can't predict. Technological innovations that disrupt everything. You can't really predict that. And so you can plot out how human behavior is, right?
Yes.
It's pretty predictable how humans are. And you can, and what's cool about the 4 stages is it's pretty similar to how René Girard's mimesis theory is, where there is a certain, let's say, keeping with the status quo or keeping with the Joneses type of ideology. And then as society evolves, there's always some types of issue in society that there needs to be a strife. There needs to be chaos. There needs to be something that causes this mimesis to break. So there's an scapegoat, and the cycle repeats and it goes to the next stage, so forth and so forth. I'm just paraphrasing it over here. But I think we're entering in uncharted waters before. And there's a lot of variables that's kind of hard to plot into someone's calculated estimate.
Oh, this is unprecedented. So like, it's not, everybody thinks like markets are efficient and like everything's always priced in, but at this point, this is like a cascade of conflicting information and conflicting views on how this is going to play out. But yet not everybody, but most people that are like trading their own accounts or using Robinhood and all that, they have just lived in an investment reality where the banks always figure it out, and where the central banks always bail everybody out, and where nobody ever really loses. So that's the real black swan in my mind, is that everybody thinks that now the common knowledge is, in game theory, there's this common knowledge. And the game theory is that, like, if you project a common knowledge, like Trump does this all the time. He always says, like, we're doing the greatest. It's the best ever. I'm so good at this virus. Everybody thinks I know everything about the virus. He projects this common knowledge and says,
the short hands.
Yeah, the hands.
Super good. We're the great.
Everybody knows we're the greatest country. Everybody knows we're handling this the best. So he's like trying to project all this common knowledge to people out there listening to him, so that they get on the same wavelength. And then that's a part of game theory. So the game theory of this of the central bankers right now is like for the last decade they've have said we're the buyer of last resort. We're gonna fix this, and even though they don't have the ability fully to do it, the game theory that they're using is common knowledge that everybody will be confident that they will stave off a depression, and it's even working on me because I'm saying the same thing. But like there are other factors that could happen that are outside the band of what I think is going to happen. Like I listed them at the bottom of the article. Like I don't think there's going to be mass riots in the street and
Well, you have it
protests.
here. You don't think so? Hyperinflation. You don't
Yeah.
see World War III. I don't see that either. Deflationary spiral. 1920 style depression. Keynesian fixes this. Mass bank failures, violent protests and riots, and election postponements.
Yeah, I don't see that's going to happen. I think that they're going to be able to, like, within 3 months, get this under control. People are going to be patriotic, and people are going to understand that they're going to have to give up a little bit of civil rights. And this isn't like the Patriot Act level. This is more like I'm gonna be really affected by this everywhere, all over my country. Like the 9/11 was horrible for people, especially in New York, but this is going to be like 9/11's happening all over America. This is going to be like war. It's going to be not like war, but it's going to be a war in the hospital system to triage the people coming in with this virus, and that's going to affect people. 9/11 and like the whole terrorism scare was more like a psychological terror, right? It wasn't a real one. This is going to be real for people. Like people are going to be suffering, and it's going to be hurting the local economy, and it's going to be obvious, and it's going to be in your face. We've never really had that experience in North America in generations where this is like a generational event that we've never had
but
before.
Canada did experience in the 89, 91, 92 crazy mortgage spikes where literally
Yeah.
1/3 of people lost all their property.
And that's
my dad told me about the stories. I remember as a kid.
I don't have any clue about that, right? Because I didn't live through that. I don't know anybody that experienced that. That was before I was born. So it's
No,
like
it wasn't.
I'm 82.
I'm 85. You're older than me. I'm saying this happened 89, 91,
Oh, I
92.
thought you said 81. Okay.
No.
Yeah, man. I was just watching Ninja Turtles at that point. Like I didn't, I'm a little kid. I don't really care about any of that stuff. And I came from Cape Breton.
Think about that double-digit interest rate. I think it went the highest. Let me Google it. I think it was like 19%.
Well, I'm from Cape Breton, so nobody owns houses there anyway. We all just rent company houses. So nobody got really affected by that where I was from. We're all in poverty anyways.
21% was the high.
Yeah, that's insane.
Gee, think about that if it was 21% today.
Yeah, it's nuts. Well, that's because back then in the 70s and 80s, the interest rates were so high because the central banks didn't have so much debt.
Yeah.
And so they were able to pay off the debt with the income tax. So the income tax was paying off servicing the national debt back then. But then the debt got so high and they had to start lowering interest rates that they just had to, now our income tax doesn't really go towards servicing the national debt as much. It's, I think 10 or 15 or 20% of our income tax payments go towards servicing the national debt, but instead they just do deficit spending and they just print more money. So,
which brings up the question, why do taxes even exist in an MMT scenario?
Well, that's a weird one. Yeah, I don't understand why, because they can just create the money.
Because I'll tell you why. Because it creates a system of slavery. It creates an artificial sense of value within the money. Without them taxing you, that dollar is worthless.
Yeah, logically, you don't like. It's even kind of stupid because during the debates about UBI, they were talking about how it would be collecting tax revenue, and I'm thinking, like, if the purpose is to just give money away, why are you taxing it back? Because people would tell me, "Oh no, we'll get half of it back in taxes, or we'll get a quarter of it back in taxes," and I'm like, why even do that? Why? This doesn't make any sense. But yeah, it's more like a system of control than it is.
If the government wants to help people right now, they should just abolish income tax, because that's a tax on labor. It's slavery.
I mean, I've kind of come around on this a little bit. I used to be more against taxation, but now I'm kind of like coming around on it. I think like it makes sense to have
How does it
certain
make sense if
taxes.
how does it make sense if I'm making 100K a year and 48% of that disappears to the government?
It depends on what it's for. So like I think like things like
How do I ben
healthcare.
how do I know they're using it for that? So
Well,
that means I'm losing 50 cents for every dollar I earn. It's the most ridiculous thing ever.
so I agree,
The
and
incentives are skewed, like completely skewed.
yeah, I think it's
You want me to have a better life and afford stuff? Give me my fucking 50 cents back.
yeah, I think the private market can totally like be more efficient with money, but I think that living in Canada and places like Finland, where we have taxes that are just as high as the United States, I mean, we have a better way of life here. I feel like
Yeah,
nobody's
but
going bankrupt because they have to get a
it's not that black
coronavirus
and white. The
test.
only fucking reason Scandinavian countries and Canada have these high tax rates and can do everything because they're fucking guaranteed and protected by United States military.
Yeah, and it's much smaller compared. Like we don't know if
Guaranteed
it
protection.
scales.
United States pays for all of fucking NATO, pays for all the Scandinavian military protections against Russia. Same
Hmm.
thing with Canada. You know, in the 70s and 80s, we stopped spending budgets on the military. And so that's
That's true. But that's because the Federal Reserve, I mean the U.S. dollar is the national reserve or the world reserve currency, and in order for the United States to keep it as the world reserve currency, the United States has to be the policeman of the world and enforce its like dominance militarily.
sure,
Otherwise,
it's
it's
quite
going to
simple.
lose status.
If they're gonna make tax, make flat tax, make 10% for
I
everybody.
agree with that. I think there's a lot of waste. I think that
But like, no, I'm being serious here. What incentive do I have to claim 100K tax when fucking 48% is taken away?
yeah, well, like it's like, do you want to the argument that people will say is, do you want to live in a society that allows people to fend for themselves, or a society that takes care of the lowest common denominator? And that's a like philosophical question that we got to
Society
struggle
needs
with.
cohesion. What metropolitan has cohesion? That's the problem. Like people understand human psychology. There's a reason why tribes are tribal. You can't have a fucking community of 5 to 8 million people knowing each other and helping each other out. It's not part of the human genetic makeup.
Right.
Like,
But like, look at how it works in the States. You get coronavirus and you need to go pay $2,000 for the test. Like, you're not going to get tested and you're going to go to work and infect
no.
everybody.
But
I
their
mean,
system's so fucked. It's not even privatized. Their system it's
their
like
system is nuts.
it's
I think,
it's monopoly controlled price. It's beyond monopoly. It's a oligopoly.
yeah, it's a
There's no free
corporate.
market. It's ridiculous.
Yeah, it's not, and that's the thing. I wrote another article on my Medium page that talks about how we live in a system that's not capitalism, and your money isn't yours. And there's this growing movement against capitalism and pro socialism. And I've had a couple of Facebook friends being talking to me about this and debating me, and I've talked to some Bitcoiners I know in Finland and stuff, and I've come around. Like I'm more in the middle of it now. I think that our taxes are way too high. There's a lot of things that the private market should be doing. There's a lot of waste, and there's a lot of mismanagement provincially and federally of money. And I definitely think there's way too many government employees. I think there's way too many regulations. And that creates this insane tax system. But when you compare our taxes, our high taxes to the United States, we get a lot more for it.
We're also 1/10 of their population.
Yeah, so we don't know if we don't know if it can scale like that. But
1/10.
I think that can be more efficient. I think like obviously it would be better if government was smaller and there was
And that's
less
not. It's not.
bureaucracy.
And in the United States, there's places where their taxes are way better than Canada, like Texas and Florida.
Yeah, it's 0% state tax,
Income,
right?
no income tax.
Yeah, and that brings your tax level way down. So that's how I think it would be good here if the provinces could really compete on attracting people. And like like people always say, oh well, your income taxes go to pay for the roads. Like
That's not true, actually.
the gas tax and the municipal taxes is mostly what goes to pay for the roads.
Correct. So what the fuck does income tax go to, what's it paying for?
And the government doesn't even build the roads. The government provides sometimes no bid contracts, but the government hires
Oh, the roads are
contractors to
so
build roads.
corrupt. It's unionized corruption, set contracts, no competition. It's a fucking scam.
So it's not like the government is building the roads, and without the government you couldn't have roads. Obviously, like it's
Well,
built
go
by
United
private
States.
companies.
How many
Private
fucking private
private
toll booths
companies
are there?
build the roads now. It's not that the government builds the roads. It's just that there's no real competition, because the private companies just, it's kind of like old boys club. Like, you know, someone in the government, you get this pork and barrel stimulus to get your contract, and you know, it's not really an efficient market. um what's this
Good.
person saying?
What do you think about the crypto alternative during the scenario? Till now, seem linked to the stock market trend, but at least long term should not be linked to the monetary policies.
Well, yeah, so that's something that I wrote in the article. And to kind of like wrap these things together, I think there is definitely a good logical argument for lower taxation. There's a good logical argument for why you need taxation and why you want to socialize some things like welfare for people who are just not
Well, this
in
is
a
where I'm a
privileged
proponent of
situation.
UBI over welfare. Welfare
Right.
system's a joke. It's a complete sham.
Yeah, and I think people do deserve a base level of dignity, and like
And
I
so give
think,
them dignity. Give them $1,000 a month. Why welfare? The problem with governments is when they keep on getting bigger every year. It's a cancer, and the wrong type of psychological person wants to be in a government position. Safe, no
yeah,
accountability, no responsibility. It
right.
attracts the worst of the worst idiotic fucking
Yeah,
people
career
imaginable.
politicians are care more about like what benefits they're going to get from
100%.
yeah.
Egotistical, centrist, me.
And it wasn't like that before. And it used to be that like people were politicians because they weren't getting paid that much money. They didn't have these crazy benefits, and they weren't getting paid by lobbyists like millions of dollars. Like Nancy Pelosi in the US is like 100 millionaire. So like how do you become 100 millionaire being a politician? Like obviously it's corruption.
Of course it is, man.
So like nowadays it seems more about branding and like what am I going to do afterwards and all these
Let's go back to this one, like the crypto take.
okay, so that's what, like, yeah, to link it in, I don't think that we're going to get to that point where taxation becomes logical and lowered and the government shrinks any time soon. I think the trend is pro-socialism, and we're going to get more bureaucracy and more Keynesianism, and that means more money printing. So cryptocurrency is cryptocurrency, especially altcoins, are not going to do well in that short term. Like have we seen they do well? No, they don't do well in the short term pandemic situations and black swan events. But long term, Bitcoin benefits and gold benefits and land benefits. Any asset that's a scarce resource that you cannot just print more of it from nothing to bail out a bank or even bail out the people. There's always going to be people that are capitalistic mindset, and they want to earn, and they want to build, and they want to have better life, right? They don't want to be taken care of from, like Ron Paul would say, from cradle to grave by the government. There's always people that want to rely on themselves and want to be like create their own abundance. And those people are attracted to assets that will go up in value, like scarce assets that can store value and increase in value.
Farmland. Have you been looked into that?
Farmland, yeah, man. Like farmland is not, you can't just print more farmland. It's a scarce asset.
Well, it's the best performing piece of land in Ontario. It's 12% per year guaranteed in the last 10 years.
But like you look at the long-term history of where we've gone and likely where we're going to go. If you had held gold from 100 years ago, you would have held your purchasing power exactly.
Yeah.
But if you had invested, like, so there's two things you got to think about. There's store of value, and then there's gaining value, right? If you had invested in the stock market in an index of the top 500 stocks 100 years ago, you'd be up you'd have like $60 million or something crazy right now.
Yep.
So over that time frame, benefiting from Keynesianism and like money printing and the economic growth of the country, which might have been pumped artificially, you would have got more money. Now that money that money went down 96% in purchasing power.
Well, look, if
So
you bought gold in 2001, an ounce was $271.
yeah, so there you go. That's in the last 20 years, the purchasing power of the dollar has been significantly eroded because in 2001, I think the national debt, if you go and look at it, I think it was like 3 trillion.
Where and what year?
2001, 9/11 happened right before the Iraq War.
2001.
US national debt, I think it was 3 trillion.
Oh, you're talking about the States.
5. Is it say 2001 5 trillion there? Well, it's 23 trillion now. So it was pretty low. So that basically means that the money supply has increased like 400%. So the money supply increasing that much over that short amount of time, eventually it like makes the prices of scarce assets increase, like houses and land and gold, and like we've seen Bitcoin, because Bitcoin is up like 10,000% in the last 5 years. But that's more like an amplification effect because people are starting to wake up to its value. So short term, it's not a good safe asset to be in. But I think you don't want to time the markets for gold and Bitcoin. I think you want to be positioned to buy scarce assets that are undervalued when this recession starts to clear up and when the trend reverses. And I think you want to be in cash. I think you want to be looking at starting a business on the bottom of this thing so that you can capitalize.
Sure.
You want to look at maybe buying
people
distressed
understand.
businesses.
People understand, like during these times, people need to deploy capital. They're looking for return. So if you have a business that can produce profit and you're a good operator, man, you can raise money.
But for the most, it's true. But most people that are probably watching this don't have savings like that they can just rely on to start investing in stocks and Bitcoin and gold and all that. So for the person who's got like maybe a bunch of student loan debt and doesn't have any RSPs or 401k or anything like that, for the person who's just getting started in their adult life, you know, or someone who's maybe a Gen X or something, 40 years old or so, and just kind of like didn't get lucky yet, you know, like for someone who's just the average median household income earner, $40,000 a year type of income, and you can never get ahead because prices keep going up and your wage is not. For that person, I think Bitcoin is a generational trade for you. I think there's a chance that if you start allocating to Bitcoin now and think that you're going to hold it for 10 years, I think you could 100x your money. But that doesn't, like, there's a guy on Twitter that just revealed that he went into debt $150,000 and bought Bitcoin, mortgaged his house, and then what? Bitcoin crashed 50% in the last week, and he's just wrecked.
Fuck.
Just do not take that kind of risk. Don't trade. Like, don't try to become a margin trader on BitMEX, and like, don't try to buy all these altcoins and stuff because they went down more than Bitcoin.
They did, yeah.
Don't get liquidated. Don't take too much risk. I think there's a real serious chance that if you just passively allocate up to 5% of whatever your net worth is, like 5% of your paycheck, you know, until you get to a certain percentage of your net worth, I'd say 5% is a good one. Allocate it to Bitcoin and don't trade it and don't try to time the market. Just slowly buy no matter what the price. Then I think if your mentality is you're going to hold it for 10 years, I could see Bitcoin at like $1 million per Bitcoin in 10 years. If it becomes the you know, if it fulfills the mission of becoming a global reserve currency, the digital gold. Tom Lee from Fundstrat has a good talk. If you go on YouTube and Google it, the generational trade, he thinks Bitcoin is the generational trade for millennials and Gen Z. Where tech stocks were the generational trade for Gen X, and real estate was the generational trade for boomers. So this is like the new asset that I think is going to be the generational trade for us. So hopefully that answers the question, because I think that all this monetary stimulus that's going to happen for both banks, businesses, and the average person, it's going to show people that the dollar is not as strong as it's made out to be, because you cannot just you can't just make unlimited amounts of it and it's going to retain its value, and that's going to drive value into things like gold, Bitcoin, land, etc.
Yeah, yeah, I kind of agree with all of it. I don't see them doing an UBI anytime soon. I don't see that.
Well, I don't think it's going to be like I don't think they're going to say like this is our policy going forward. It's going to be UBI. I think there's just going to have to be like, in order to avoid violent protests and riots in the streets, and like in Iran when they were like throwing Molotov cocktails at the central banks and stuff. I don't think they're going to be able to avoid doing stimulus for the street, because the average person's going to wise up to the fact that all these businesses, these big corporations, are getting these $15 billion loans from the government, and wait a second, it's actually my taxes, and my kids for a generation are going to have to pay for the money that you're
Mm-hmm.
giving these banks and these
Mm-hmm.
elites. I need something. Why don't you bail me out? And I think that's going to, like, if they don't do it, they're going to do it, man. They have to do it. So it's not going to be like they're going to set up UBI ongoing. They're just going to do like a UBI style airdrop for maybe a year or something like that, to try to keep people from really feeling the negative effects of all this slowdown that's going to happen in the economy, and people getting suspended from work or laid off from work for short periods of time while these quarantines have to be enforced.
I think that next week is going to be more quarantines in the States. I don't know about Canada though, but in the States at least.
Well, I think it's good spread. I think it's going to be spreading within 2 weeks. It's going to be spreading more and more and more. Today, a lot happened. There was a lot of stuff happened today. There was mandatory office shutdowns all over Europe. Like, I think it was in Italy and Spain. Italy had already done it, but Spain's doing it. France did it. All businesses have to close. Like, in Canada, we suspended all travel. I'm pretty sure that happened. At least they strongly recommended that everybody come home. If you're overseas, come home while there's transportation available. And anybody who is coming home has to be in a quarantine for 14 days, like at home. It's everywhere.
Yeah, it's everywhere. But I think, I'll be honest with you, I think you're putting too much faith into the government that they're going to respond appropriately.
Well, that's my non-gloomy outlook. I have a gloomier outlook that I'm not going to talk to anybody about because it gives me back pain.
I will agree with you that they will bail out all their buddies on the top, but this whole notion of pitchforking that they're afraid of is rubbish. I doubt we'll see any airdrops. And yeah, I don't know, man. I just think we're going to go, I already see the writing on the wall. You look at second order effects, third order effects. You look at most people are relying on hourly work, and you look at all the events are canceled, all the major league sports are canceled. This rolls over to second order effects, less Uber drivers, taxi drivers. People aren't going to restaurants, as I just showed you the data. Mm-hmm. Coffee shops are closing right here in Toronto. I've been paying attention on Twitter. One coffee shop already is like, my guys can't come into work. It's like, I'm tight margins. It's like, I'm just going to close up. And so you have all these small businesses to be closing down shop. I don't see how stimulus is going to get into the physical hands of these people. Like, how I don't see the government giving them physically a stimulus.
Well, in 2001, or maybe it was 2003, something like that, like George Bush did some kind of $1,000 stimulus check. Do you remember that?
Well, I'm not American, and I was young, so no, I don't.
Yeah. It was, and Obama did the same thing, kind of. Like, he sort of did the cash for clunkers thing after the 2008 collapse.
Mm-hmm.
Whereas, like, bring in your old car and we'll give you a bunch of money to get a new car. And that was kind of like a way to airdrop money on people and hope that, and force them to buy new cars with it, basically.
But all these models are dumb. Like, if the government really wants to help, give me a negative tax credit. It's and Milton Friedman talked about this. It's a piece of paper, mail it to me, send it or digital, email it to me, and I can redeem this for whatever I want. I can put it towards anything I want.
I think they're going to do that. I think they're going to have to pull out all the stops. Like, they're going to have to do Italy suspended mortgage payments. Trump said he was going to, in that press release on Friday, he said, or the conference, he said that he was going to do student loan interest pausing. I think they're going to take whatever measures they can because they realize how serious this is going to be for the global economy. Because the U.S. and Canada, we don't have any real manufacturing, and we're reliant on India for all of our medicine and masks and stuff like that, and China for all of our masks and medical equipment and everything.
And metal. India's huge in the metal industry.
Yeah, so we're reliant on all these countries, and we've already seen supply chain disruptions. So there's already like a global macro struggle, sort of like currency war that has been happening between Russia, China, US. And there's been stealth wars being fought by the US and Russia in Syria, and Canada and Russia in Ukraine. So I mean the stage is heating up for like a physical confrontation, but I don't see that happening because there's no winners there. Nobody comes out ahead on that one.
It's bad business, bro.
Yeah, it's bad business. Well, actually, that's what I started to think today, and I didn't put this in the article, but war is good for the economy, and that's what Franklin D. Roosevelt, was it him or was it Eisenhower? He warned about the military-industrial complex.
Oh, that was Eisenhower.
Yeah, so on his way out, he warned about the perils of the military-industrial complex taking over, and that's happened. I mean, that's obvious that war has been driving a lot of the fiscal decisions of the United States, and there's 7 wars happening right now. I think if the economy gets bad enough, that is going to be one of the options on the table, that they'll try to stimulate the economy with war, and a physical confrontation would happen, which I don't think is good for anybody.
No.
So that's why they're trying to get all these trade agreements done and trying to stop this thing. And I think they're going to try to do as much fiscal stimulus as they possibly can for the elites and the streets.
Yeah. So we'll leave it at that. The elites and the streets. Brad, always a pleasure. Guys, go check out his article. It's on Medium, I believe. I'll leave a link below the video as well, so you can check him out at Brad Mills Can on Medium. And Brad, if they want to get a hold of you, what's the best? Twitter?
Twitter's good, yeah, at Brad Mills Can on Twitter, or message me on Facebook.
All right, guys.
I'm the guy with the profile picture with a mask on.
Yeah, message him. All right, guys. Talk to you soon. Peace out.
See ya.